and welcome. You're watching Closing Trades on ET now, and for now we are staying above the mark of 25,100. So definitely holding on to those live high levels on the Nifty. It's been a good run so far, and even the broader markets, that's the talking point right now, because the mid-cap and the small-cap indices hit the record high even before the frontline index, and they were holding on to the gains apart from the last few minutes, wherein the mid-cap index has given a bit of the gain, but small-cap index too has been, off the day's high, but at least in the green for now. What else is happening in the market? A lot of big buzzers in the trading session as well. Plus, in terms of the sector-specific action, you do have, Bank Nifty, which has been underperforming actually. So while the Nifty and the mid-cap and the broader markets have managed to scale the live high levels, it's the Bank Nifty which is 4 to 5% still away from the live highs. IT sector, that's something which is holding on very, very smartly today. That sector is at live high level. It's, stocks like LTI Mindtree, L&T Tech posted its analyst meeting, as well as Tata Elxsi, which is on the downside on account of the Kotak note. All of these stocks are in focus. For the market itself, it's the 10th consecutive day of gains coming in for Nifty, and it's the longest streak that we have seen since October 2020. So that's definitely something which the street will like. Pharma and telecom stocks, they are gaining in the trading session as well. So lots ready to talk about.
Oh yeah, absolutely. Just so many buzzers, while the day, of course, belonged to the index hitting that all-time high. But sure enough, there's a fair count of buzzers from within the mid and the small caps as well. Trent on its way, of course, to become a Nifty name. Bernstein has initiated coverage with an outperform rating. They've set a target price of 8,100, no less, on the stock. In fact, I'm going to take it across to Vinay as well, and get us and get us some more details on what that note actually entails and why are they so super bullish even after the run-up that the stock has already had on Trent. Jinay?
Well, yes, if you look at the returns in 3 months itself, Trent has given a return of more than 55%. Now, there are many triggers. Let's start with the Bernstein initiation. So, the Bernstein has given an outperform rating with a target price of rupees 8,100. What they like is Trent's best-in-class revenue density and the inventory turnover. Also, whereas the continued network expansion and store performance will be the key trigger going ahead, is what Bernstein believes. Also, Nifty inclusion could be one of the trigger as well. The Trent and BAL will be replacing Divis Labs and LTI Mindtree in Nifty 50 from September. Now, analyst expects that this could bring in a net inflow of about 472 million US dollars in Trent itself. Moving on, strong results alone also would be one of the key triggers. If you look at the 5-year CAGR revenue growth, it has been growing at a revenue CAGR of 36%. Along with this, also Trent stands as the most profitable retailer in India. If you look at the EBITDA margins, it stands about 15%, which is superior to given its any peers. Apart from this, we also have a positive commentary from management. Well, they said that they will be continuing with the aggressive expansion plans and deepening their store presence, and along with this, Star Bazaar will remain to be the key growth drivers going ahead. Now, if you look at the valuations apart from the key triggers and consensus rating as well, the overall consensus rating stands positive with the buy rating with the 12-month target price at 6,166, which is actually at a discount of current CMP with 15%. Also, if you look at the valuations, what you will see is the 12-month forward P is currently trading at 115 times versus the 2-year historical P of 96 times. So, you are seeing a premium at P multiples as well.
Yeah, and that's been no challenge for Trent, to be honest. Valuations at 2-year average being of 98, now at 115. Deveen Choksi is also with us. Deveen, is that a challenge at all for Trent, you believe, sitting at live high levels? What would be your recommendation for people on Trent?
Yeah, good afternoon. Well, my understanding on the subject is that I think currently most of the aspects about the business are fully factored into the price. When you look at the valuations, I think it explains all. So from a valuations perspective, I think the stock is adequately covered on every aspect. However, having said that, I think important point to observe here that majority of the funds who have been holding on this stock for the want of second company available in their portfolio of a size. Probably, I think they stay limited with likes of DMart, likes of Trend in the portfolio. Maybe I think some amount of softening of the price may happen eventually, which could possibly be the entry of Reliance Retail in the market. Now, if that particular situation happens to be the reality, then in such situation, I think you might see some moderation or correction in the existing e-com companies which are currently quoting at a valuation which is fairly premium at this point of time.
Interesting. Kunal, have to get a take on the charts as well. How soon do we see 8100? Because the climb up from 6,000 to 7,000 surely has come in just no time at all.
Yeah, it's been very quick, very fast for Trent, and the last 3 months or so, the stock has moved from 5,500, 5,000 levels to now 74, 7,500, 73, 70 to 7,300, where it's trading right now. So the momentum has been quite fierce in the last 2-3 months. There was just one bout of correction which the stock had seen in the month of July. That was a point when the stock had corrected from 5,700 to sub 5,000 levels in a matter of, I think, 1 or 2 weeks. But post that, we've seen the stock getting back into a thick of momentum. So I think it's a classical chart where one could probably look to trail stop losses and keeping the previous week or the previous month low as a stop loss, depending on the time frame, could be a better strategy for traders who are holding on.
Okay, so that's a take on Trent right now. But Nifty IT index itself is also sitting on life high levels. Today it's getting support from the likes of LTI Mindtree, which is reacting to the Kotak note coming in, the upgrade, the fair value they're pegging at around 6,200 bucks a piece. You also have news flow coming in on Wipro, wherein there has been extension of one of the deals. So that stock is in focus. HCL Tech is in focus because the investor day is underway right now. So we'll be getting more details on it post-market closing as well. So we are watching out for that. L&T Tech actually held its analyst meet yesterday in Bangalore. They're talking about 18 to 20% growth in the medium term. That's got the street excited. But the only IT stock which is perhaps on the back foot today is Tata Elxsi. Valuations there are also a bit of a challenge. 61 times forward earnings. Kotak says that they're very punchy. 5,500 is what they believe is actually the fair value. So let's see where it goes. But for now, that stock is under pressure. Naresh, what's the view on IT as a pack and some of these individual names that I talked about?
So IT as a pack has been showing a lot of strength. Today, finally, Infosys, which was a laggard, has also crossed the recent swing highs. And that has some more catch up to do. The previous highs are closer to 2,000. So that is one. In terms of the smaller names, we are seeing good breakouts. So something like a LTI Mindtree, which is broken out today, becomes a buy on dips going forward. And beyond the 400 mark. So that is one favorite in the large cap space. Birla Soft is also in a bounce back. So overall, the structure is positive for IT. Continue to have the same view of buying on dips.
Today we had a chat with Gautam Shah as well from Goldilocks, and he was talking about as to how he's seeing a 12 to 15% upside on the IT index, even from the current levels.
I wouldn't be surprised if the IT index appreciates by about 12 to 15% from here. I'm actually batting for a 1,000 rupee move on TCS, and if that were to happen, it will single-handedly take the IT index and the entire market up. So IT is clearly a favored area. The ratio charts are in good shape. In every bull market, at every point of time, you have to understand risk reward. I don't think this is a good time for bets in the auto space or the capital goods space based on risk reward, because any market correction and some of these names can correct quite a bit. This is the time for newer sectors, and I still feel that metals could be the dark horse candidate for the next 6 to 12 months, followed by NBFCs and banks, and clearly chemicals. So I'm actually looking at newer sectors to play the market rally.
Looking at newer sectors, and let me toss that question to Divyen as well. Any new stocks or themes or sectors that you are watching out for?
Sorry, I couldn't hear the first part of the question.
My question is, Gautam was just talking about how you should not chase the momentum because in some of the sectors, the valuations has become punchy and you should look at sector churn and new sectors and new themes. So I wanted to ask you whether you too have managed to identify any fresh theme or any fresh stock ideas?
Yes, I think absolutely. See, as a direction, I think we find that the commodity space will remain probably the outperformer in coming months. Largely because of the fact that on one side, the crude oil prices are remaining low and there are promises to remain low. Should there be a positive outcome on Russia-Ukraine war front, I think definitely it will augur further positive for the crude oil prices. And if the crude oil prices remain low, then in such situation, derivatives of crude oil prices, including the energy cost, and which is a raw material for metals, I would think that I think this is going to be directionally very positive. Second most important point as we progress further on hydrogen as a power, the green hydrogen as a power, we believe that the metal commodity will have an inherent advantage of consuming the power at a significantly lower cost with the green hydrogen coming into play, which is going to be a play for next 5 to 10 years, of course. But I think in the near term also, market is expected to factor that aspect into. So commodity as a space, including chemical commodity, we find that I think the probably the better times going forward. From the pipeline, I think the expensive inventory is also out, and as a result of which, I think some of these companies are looking relatively better placed on the margin front for FY25. Similar is the view that we carry for the BFSI space in particular. The banks which has a capability to acquire larger amount of current deposits, those banks are relatively better placed comparatively. And that is where some of the corporate banking names I think we feel are relatively better off. So cost of fund coming down is going to be an added advantage, and which is going to be a structural move for next 4 to 6 quarters. So metal is a commodity, banking and financial segment, including the market intermediaries into it and insurance into it. We believe that I think could be the outperformers in the coming market going forward.
I also want to pick up on the point on the Nifty IT index. While it's sure hit that all-time high and the charts are indicating further an uptake, but Kotak, like Anisha was highlighting earlier, has come out with a note on LTI Mindtree, Tata Elxsi. While for Tata Elxsi, they're retaining the sell, the fair value, they are pegging at 5,500. For LTI Mindtree, of course, they're extremely bullish. They've upgraded the stock to an ad. Are you also spotting any opportunities within the IT pack at all?
Yes, I think so. We find, I think some of the companies very interestingly positioned. You mentioned Tata Elxsi. I would probably add to it Tata Technologies. These companies have some distinct advantage in form of, I think, their product offering, service offerings. They are operating in the niche play. Say, for example, Tata Technology, I think in the auto vertical as well as in the aviation vertical, within the transportation segment, they provide end-to-end solutions. So obviously, I think this particular company has a larger amount of business to talk about from both these verticals, which are likely to grow and grow systematically, because there is a systematic approach, I think, towards the multiple technology segments, I think, happening in the auto sector as a whole. That is where this company is likely to see a roadmap ahead for next 3 to 5 years with a good amount of clarity on the execution as well. Similarly, for Tata Elxsi's too, I think though auto as a one vertical, with which remains I think common between the two companies, but the kind of services that deliver within the auto space vis-a-vis Tata Technology, Tata Elxsi also has relatively different kind of roadmap to follow, with other four verticals also equally interestingly positioned. So yes, I think we find that companies which are with engineering and R&D along with, and the ability to deliver the IT solutions either to the manufacturing or to the consumer as a whole, probably would have relatively better time compared to the larger peers who are likely to grow relatively slow at 10 to 15% at the best, whereas these companies could possibly grow between 20 to 25% in at least next 3 to 5 years.
So that's a view coming in on some of the IT stocks. Time now to head into a very short break. And as we do that, here are the commentary coming in from the Raymond management, because remember, for that stock as well, there is a fresh trigger which is at place. Raymond Lifestyle is going to get listed separately on the bourses in the coming few weeks itself. So that again is something to watch out for. They recently held an analyst meet and the brokerage community came back quite positive. Hear out what the management had to tell us.
We are quite optimistic about a strong wedding season, and obviously the festivals are going to be very good, because if you see, we have already starting to see the trends from our dealer franchisee network that they're already demanding the product and saying, because the network which I have got spreads over 600 cities, which tells very, very clearly that the demand for our products is going to be very, very strong. In terms of the revenue expansion, which we are seeing, I think there will be a significant faster growth in that, as we plan to open more than 350 stores for the ethnics, dedicated ethnic stores. The wedding space, we clearly see anything between 12 to 14% of growth over the next 4 to 5 years on year-on-year basis we can achieve in the wedding segment for us. Last year we opened 200 EBOs. We plan to open another 500 to 700 EBOs in the next 3 years.
Back with closing trades right here on ET now, and holding out well, and we're clinging on to the gains. 25,086, a little bit of a dip from the peak of the day, but that's pretty much okay. Still latching on to the gains for some of the select IT names. LTIM, Wipro is holding out very well. Innocent Bank has notched up a good 2.5% in trade. Infosys looking very strong. Bharti is delivering a good 2% of a move coming in there, and then Divi's Labs as well, which is holding strong by a good 3% as we speak. Still got Deven Choksi on the show with us, but let's just address what's happening in the capital goods market, or the sector that is, because some of these stocks are off their 52-week highs, and most of the companies have also missed their earnings estimates. So what's really ahead for the capital good companies? Ria joins us with the bull as well as the bear case.
Let's take a look at what's happening in the capital goods space now. After a very sharp rally, a lot of these stocks have fallen off their 52-week highs. So Siemens and ABB have fallen around 12 to 14%. Thermax has fallen 24% from its 52-week high, and L&T has also fallen about 6%. Now let's take a look at what factors are actually auguring well for the industry and what factors are weighing on the capital goods space as a whole. So on the positive points, we have some robust order inflows coming in for most of these companies, and they have a very strong pipeline also going ahead. And we're also seeing a lot of strong demand from the Middle East and from the data center segment as well. And in fact, the government push to manufacturing and the boost to private capex is also auguring really well for the industry as a whole. Now, the factors that are weighing on the capital goods space is the labor shortage right now, which is posing constraints in the domestic execution front. And Q1 in this quarter saw weak ordering momentum across companies due to the general elections in this quarter, and there is some overall lumpiness in execution as well, and the geopolitical tensions are also weighing on these companies. Now, if you take a look at the valuations of these companies, most of them are still trading above their 2-year averages. Siemens and ABB are trading around 84 times their FY26 earnings, and Thermax is trading at around 63x the FY26 earnings. L&T is the one though that seems to be trading a little closer to its 2-year average at around 30 times the FY26 earnings. Now let's also take a look at the company specific trends. So we're looking at the estimates versus the actual earnings. So on Siemens, the revenue and EBITDA missed expectations 3 out of 5 times in the last 5 quarters. And for Q4 FY24, that quarter saw a beat in the revenue and an inline EBITDA, and that was the best quarter in the last 5 quarters. For ABB, the revenue missed expectations 2 out of 5 times, but the EBITDA did surpass expectations 4 out of 5 times, and one of the quarters was an inline quarter for the EBITDA front. For Siemens, Q1 CY24 was seen as the best in the last 5 quarters. Now for L&T, the revenue surpassed expectations 3 out of 5 times, and the EBITDA surpassed expectations 2 out of the last 5 times. Lastly, on Thermax, the revenue and EBITDA both missed expectations 3 out of the last 5 quarters, and Q4 of FY24 was seen as the best in the last 5 quarters with a beat on both the revenue and EBITDA front. So going forward, we're watching out for how the company is going to perform in the next 3 quarters.
Okay, point taken. Thanks so much for that, Ria. So definitely there's a good bull versus bear case scenario building up for the capital good major. Kunal, what's your view? Which is the stock you would pick out as a bull within the capital good space, and on which stock would you be a bear?
So neutral on the sector so far, because I think not too many stocks are actually in the thick of momentum. When you look at the charts for ABB, Siemens, L&T, etc., I think all of these stocks over the last 1 month broadly after that correction and then a recovery have been more plateaued. You know, these stocks, they were trading much above their long-term moving averages. So I think, for example, the likes of ABB, L&T, etc., these stocks were almost 15% to 20% higher than their long-term moving averages. Now, after that correction and then a consolidation, these stocks are somewhere in between their 50 and the 200 moving averages for themselves. L&T, I think, is on the verge of retesting the 200 DMA, which is around the 3,500, 3,400 levels. So which means that what these stocks are now likely going through is a time-wise consolidation rather than a more of price correction, which has already happened. And I sense that potentially this could be at least another 3 to 4 weeks before we see any kind of a volume built up or these stocks ending a last leg of the correction and then finding themselves at a very attractive support territory. So not much of a view into the cap goods space, but I think in case if these stocks retest their 200-day moving averages or say fall by a margin of another 5% as an overall basket, then I think it makes an attractive risk reward.
Right. Okay, in the meantime, all eyes are also currently on the upcoming Reliance AGM tomorrow. And while we are awaiting the meeting, Samit has put together a price movement chart of the stock during AGMs, the couple of key announcements that have been made, and how Reliance has panned out thereafter. Samit?
Well, India's largest company, Reliance Industries, will be holding its AGM on August 29th. Now, the AGM expectations for this, expectations for this AGM is somewhat linked to its the management's commentary that has come in the past AGM. Now, 5 years back, the chairman Mukesh Ambani had mentioned that they will do an IPO for the telecom and the retail business within the next 5 years. In 2022, the chairman also mentioned that they are looking to double Reliance Industries' market capitalization in the next 5 years. Now, for Reliance Industries to double its market capitalization, IPO or value unlocking is very critical, and this value unlocking can be done only via demerger or the IPO of the retail and the telecom business of the company, and that is what the street wants to know, and that is the most important commentary that the street would be watching out for from the annual general meeting that will be held on August 29. Apart from that, the update on commissioning of solar cell and model manufacturing plant is something that the street would want more details on. Also, what is the update on scaling up the enterprise business when it comes to the telecom segment, and how they are looking to re-enter the quick commerce business, and any updates on the consumer brand business when it comes to the retail segment would be something that the street would want to watch out for from the August 29th annual general meeting. Now, in the past AGMs also, we have seen some big ticket announcements coming in from the company, because of which there have been some good share price moves in the past. In fact, in the 2019 AGM, when the company had spoken about the deleveraging tactic on the AGM day, the stock price had moved nearly around 10% odd. But if you look at the pre-AGM move, we have taken the 10 days move, and 4 out of the 8 past AGMs, if you look at, the share price movement has been kind of negative. On the AGM day, 6 out of 8 times the share price movement has been negative, and post AGM, 3 out of 8 times the share price movement has been negative. But do remember, it is the last 3 consecutive AGMs where the share price movement has been negative post the AGM has been completed in the next 10 days. So it would be interesting to track how Reliance Industries share price moves this time. So far, the share prices have gained around 2.5%. It would be important to track how it moves around on the AGM day based on the announcements, and post that as well.
Okay, Samit, thanks so much for bringing us those details. I think if Deven is still with us, Deven, okay, so point taken on that. But moving on, there is that story that my colleague Prakash is actually, is talking about, and that's about the interministerial consultation as far as the gas storage is concerned. We'll take it across to Prakash as well to get more details on the story, and then we'll get Naresh to talk about some of these gas companies as well. First up, Prakash, tell us what exactly are you picking up?
Yes, we are learning from our sources that the Oil Ministry is likely to initiate interministerial consultation on gas storage system. We were given to understand that the interministerial consultation will begin from October 2024 after the ONGC's report, which is likely to be submitted by end of September. Then the IMC will be initiated, and the Oil Ministry is planning to get final cabinet approval by end of this year. As you are aware, and we have reported earlier, that the government is planning to set up gas storage system in the country with an estimated investment of rupees 20,000 crore with the storage capacity of 4 million tons in a first phase. And the target is to have natural gas reserves of 20 to 30 days of requirement in any sort of emergency. Therefore, the government is planning to set up gas storage system across the country, and a new company will be formed to operate a gas storage system, and companies like GAIL, ONGC and OIL may be given stake in the new company.
Right, okay, that's some exclusive info that we're currently picking up. In the meantime, let's just address what else has been, moving in the market right now. While sure enough, it really seems to be an IT day, IEX has made a move for a second consecutive day. Right now, also, it's holding up a good 3.6%. You had a strong move on the stock yesterday as well. Naresh, what's your reading on the chart? Because this is turning out to be quite the breakout candidate.
After a long time, the stock, after making multiple false starts over the last 1 year, has broken out above that 160, 180 mark, consolidated, and it's in a nice trend, higher tops, higher bottom formation. Currently was a flag formation between say 175 to 198, 200 levels. Today it has broken out above those levels. Volumes are higher than the last 1 week. So looks like setting up for a move towards 220 to 230 mark in the short term. So a buy at current levels.
Point taken. So that's a view coming in on IEX. But let's take some closing trade ideas from our chartist then. Kunal, what's on your radar?
So that will be a buy in NTPC. The stock is looking attractive in terms of a potential breakout above 410, 415 mark, which has been a range for NTPC over the very short term. So expecting a breakout above the higher levels and a potential move towards the previous swing highs of approximately 430, 435.
Okay, and Naresh, what about your top idea right now?
So that would be a buy on highs. Good momentum in the pharma packs. Expecting this to continue.
Seems to be something wrong with the connection, and we'll try and reconnect that. But let us do that in this short break, and we'll be right back with more. Change of guard that's been underway at SBI. Of course, yesterday Mr. Dinesh Kumar Khara resigned from his position, and today Mr. C.S. Shetty has taken over. But what's been the legacy of Mr. Khara at SBI, and what are the brokerages making of Mr. Shetty coming in? Let me take it across to Gaurav to bring us all of those details. Hi, Gaurav.
Well, yes, Mr. Dinesh Khara has now stepped down as a chairman of SBI, the biggest bank of India. And let's see how the journey has been for SBI in the leadership of Mr. Dinesh Khara. So when we talk about the SBI's journey, the specific thing comes is the asset quality. Now we know that PSUs are known for not having a good asset quality, but specifically when we talk about SBI, the biggest bank of India, we saw a significant change in the asset quality. So Mr. Dinesh Khara joined SBI in October 2020 when COVID was there, but ever since that we have seen a significant reduction in gross NPAs as well as net NPAs. We saw net NPAs going down as low as 0.57% for the entire bank, and at the same time when we even talk about credit cost, that went down as low as 0.28% in FY24. Now that it has normalized a bit to 0.48%, but even if when we talk about the commentary, SBI's chairman was very sure that unsecured book for the bank, when we talk about the loan book, is actually much better than secured, and on back of this, now they were eyeing for a credit cost which is around 0.5%, but internally they have a target of credit cost of around 0.25%, which was actually a very positive thing which played out for SBI in the leadership of Mr. Khara. Apart from that, when we talk about loan book and deposit book also, that grew very healthy at a very healthy level. Advances grew almost at 21% CAGR, while deposits grew almost by 15% in the term FY21 to FY24. And when we talk about the return ratios also, there also we saw some kind of improvements. ROAs are now above 1.1%. When we talk about net interest margins, during the entire tenure, net interest margins remain at around 3% and above. And that is the reason when we talk about the stock price, when we compare it with the historical trends, the stock price was actually range bound in the range of 200 to 300 rupees since 2010. But after that, we have seen a sharp spike. Now the stock price went up almost 4.5 times ahead of what we had seen in 2020 at the lowest level of SBI. Other than that, now that Mr. C.S. Shetty is going to take over, what brokerages believe is that there is going to be a smooth transition, because over a decade we have already seen 3 chairmen changing place, and there has been a smooth transition with the bank, and bank has also sustained its market share. They also believe that we may see some kind of rejig happening in the MSME space, because bank may generate greater ROA, risk-adjusted ROA, when we compare it with the other spaces from the MSME segment. But there are certain headwinds in the sector itself. So first is that deposits growth. We all know that the banks are struggling to grow their deposits, and that could actually create a pressure on the cost of funds, which could be a headwind for Mr. C.S. Shetty in the coming quarters. And other than that, credit cost normalization is also going to be a thing where we are already seeing that SBI's credit cost is going up, and that might be a challenge for Mr. C.S. Shetty. But let's not forget that C.S. Shetty was one of the top managements in the period of 2018, where the bad loan cycles were happening, and he handled more than 1.5 lakh crores of portfolio, and he managed it very well in terms of SBI. So definitely there are some optimistic views coming up for C.S. Shetty as well. So on back of all these factors, we are watching out on how it pans out for SBI as well as its investors. But definitely a smooth transition is what we are expecting from SBI.
Okay, a smooth transition at SBI. Varun, we'll leave it at that. Let's also welcome on board Anshul Segal and find out what he's making of the market right now. Anshul, hi, afternoon. Good to have you on the show. Banks, let's discuss exactly that then. Do you think the underperformance is finally coming of age? Because while the Nifty is still, at a fresh all-time high, so are a lot of other individual indexes. Not quite the case with Nifty Bank.
Afternoon, Aisha. Good to be with you. So banks have been a rank underperformer in the last, I'd say, about 6-8 months. While other segments of the market have rallied as they have, banks have really done nothing. And some of that is because banks have been an over-owned space in the last so many years. Because they are about 30 to 35% of the index as a constituent, banks are clearly highly owned by the street. And at this time, even though valuations look reasonable, because of certain headwinds on their operations, banks are not really the favored space. What we have also seen of late is that while in the last 3 years we've seen about 15% credit growth in the system, but if you look at the last 2 fortnights, that credit growth has tapered down to about 13 to 13.5%, and largely on account of deposits in the system being slightly difficult to come by. In this sort of a setup where there is over ownership and that there is systemic deceleration in credit growth, banks are really not being favored by the markets at this time. But in our judgment, it's only a question of time. Given where valuations are, this is a space which will be favored by the street. This is probably one of the few spaces in the market which remains quite reasonably priced at this time. And so let this little bit of a headwind on credit growth go away. And we do believe that this is a space which markets will favor in, say, the next 1 to 2 years. Definitely, the risk reward is favorable.
That's the word coming in as far as some of these financial stocks are concerned. But Nuresh, what's the view on SBI?
The stock has gone sideways overall for the last many weeks, and it topped out on the day of the exit poll. Say from that price point of 900, it has been drifting lower only, as a lot of support around the 750 to 780 mark. At current levels, I'll wait for the price tick above 830 to start looking at it. But for now, it's been a sideways to a downward trend, and continues to be a consolidation. So very similar to what has been happening with the whole banking space.
So that's the view coming in on the banking space. But Kunal, if I can get your view also on this. Financials as a pack, SBI, because as even Gaurav was pointing out, it was fairly sideways before Mr. Khara took over. And last couple of years, that elephant has started to dance. What analogy we use for that one?
I think long-term wise, yes, these stocks have done phenomenally well. I remember, I think SBI trading at a point, pre-2020 towards a zone of, I think, 170, 180 for quite some time, and the stock has done exceptionally well post that. But then on the short-term charts in the last 1-2 months, we've seen the banking stocks underperform, the PSU banking lot, large cap names like SBI, even the the prominent names like PNB, Bank of Baroda, Canara Bank, etc. These stocks have underperformed, and even the private sector banking stocks have underperformed. So I probably believe that we are into that sector rotation phase where potentially these private sector banking names in the PSU banking lot are getting into a zone where there is profit booking or there is trimming of long positions shifting on to the other sectors. And my sense is that if these stocks say correct by a margin of 20% broadly, 15 to 20% from their June-July swing highs, that could potentially be a point where traders could look at a contra buy.
Okay, that's that on banking. In the meantime, of course, technology is the one which is gaining ground, and pharma as well. Anshul, wanted to get your thoughts in here. I mean, of course, it's a very niche space. No two companies are similar, but we've seen a fair amount of rebound play out in pharma. Anything that looks good to you?
Pharma is an interesting space, Aisha, just now, because what's happened is that for the last nearly 10 years, we've had a one-way and down decline in prices of pharma generics from India being exported to the US. Now, that's led to a situation where it's really not remunerative for Indian companies to manufacture many of these drugs. And so there are shortages on US racks of Indian generic pharma goods. And as a result, they're allowing for some stabilization in prices. Combined with that, we are seeing US FDA being slightly lenient and Indian facilities coming on board. Both these things bode well for Indian pharma exporting to the US. In any case, pharma companies which were selling within the country, they hadn't seen any stoppage in terms of demand. So that demand was always very strong. If you look at this whole thing as a combine, it looks like pharma is very interesting, having consolidated for the better part of nearly 7 to 8 years. It's really turning around now in terms of valuations. And in our judgment, this has further legs. Also, geopolitics has a play in this, given that people want to move away from China. Particularly on the CRAM space, India becomes a very interesting market because we have the know-how, we have the capability, and we have the scale to cater to the US markets on contract research. So overall, pharma looks an interesting opportunity at this time, more so because the rest of the market is expensive at the moment.
Pharma does look like an interesting opportunity, especially the comfort on valuation front. But valuation is something which is not very comforting for some of the MNC plays. But given the fact that the Indian markets have been seeing this gush of liquidity and have been doing quite well, some of the global players are looking at cashing in to the Indian markets as well and are using it, for listing some of these, companies and subsidiaries in India and unlocking value. Let me take it across to my colleague Anurag and get more details on this story. Hi, Anurag.
Hyundai Motor India, which in June had filed a draft red herring prospectus, which is a draft of a document for an IPO with the Securities and Exchange Board of India. LG Electronics is considering an IPO for its India business, and this comes months after Maruti Suzuki's market value being more than that of its parent, more than double that of Suzuki Motor Company. Hyundai Motor India's IPO may be a precursor for more global firms looking to list their Indian subsidiaries. Now the rationale for this is that many of these companies have been in India for decades and they are looking to unlock the value and they are looking to strike a valuation. And if you look at the reasoning, all
there, but we have a big guest joining us on ET now, and this is the first interaction of the new SBI chair, Mr. C.S. Shetty, in conversation with my colleague Ankur Sharma.
So that it becomes a plug-and-play model. And once all these fintechs we start to work on, there are a lot of side services, niche services which fintechs bring. And we want to give that experience to the customer without actually having to build everything ourselves. Because our earlier philosophy was building everything ourselves. But that is no longer the case. We realize that many of these services are not necessarily for all times to come. They are currently niche, currently in demand, but maybe over time customers may not want them. So we want to quickly launch them, see how the customer reaction is, and if they work out, fine. Otherwise, we can then move on to another service. So this can only work with partnerships. We can't really build everything and see it fail.
One of the innovation, I would say, or new trial was operational subsidiary, which SBI thought of. How is that working out? Is it giving you the desired result which you wanted?
So it's a work in progress. It's a subsidiary which is working like a business correspondent. That's the same kind of license it has been given. The start has been really good because we started off with this in the rural and semi-urban areas. And it really helped us in the agriculture space because many of our branches in the rural area do not have a lot of people. They are essentially single officer branches and they can't really go out all the time. So this is our outbound person who goes out to the home of the customer, gets the necessary documents, helps them fill the forms, brings it back to the bank, helps the account being opened or a Kisan credit card getting serviced and renewed. So a lot of those services have already been started and these people are essentially local people. So they know the language, they know the local people. So I think it's a very new model which we have tried. This is not something we have done. As you know, our general staff, employees, all India, it's hired across India based on exam. So this is a new model and hopefully this will help us to give the doorstep service, give help with the small ticket servicing, the bottom of the pyramid, and as we move along, maybe move on to recovery and multiple other services which any customer or any segment requires.
Right. One of the problems which banks were facing recently is the deposit side. Now, State Bank of India being such a larger base, what is your view in that? Is it there going to be any impact on the margins which you think you will also feel a similar kind of pressure?
So there are 2-3 things. One is that this is a fact that for the last 26 months, that is slightly more than 2 years, the deposit growth has lagged credit growth. This is actual data. And there are many banks which have CD ratios either close to 100 or above 100 or definitely between 85 and 100. Now, as far as we are concerned, we are still marginally short of 70. So we might exceed 70 this quarter, but around 70, let's say. So therefore, we have some way to go, whereby we already have excess SLRs and we are using that to actually lend more. But the pressure on deposit rates is clearly there. And as the deposit rates increase because the demand for higher rates is there and every bank is trying to raise deposits, there is clearly this pressure on the margins, because on the loan side, we are probably at the peak of the interest rates. They are not going to go up from here on. And yet the competition is such that people are quoting very, very low rates. And this is something I think our chairman has been on record to say that we should not give loans at rates which are not economically viable. So one can understand once in a while, but it cannot be a general trend that we will give out loans, and we have been trying to resist this trend. But this is the market, this is the competition, and therefore a combination of lower and competitive rates on the loan side and a higher rate on the deposit side clearly puts a pressure on margins. This is true for industry, which is true for us as well.
Can we expect the credit growth target to be revised considering the growth scenario which has been there?
We haven't revised it so far. We have been giving this guidance of 14 to 16 for a long time, and actually doing more than that. So what we saw in the last one quarter and the previous year was our agri, our SME, our large corporate, all of them have grown around 20-18%. The unsecured portion and the housing loans actually has come down. Housing loan is around 12, and unsecured is also a lower number. So clearly the demand from the economy for productive sectors is quite high, and as long as that is there, I think we would want to support that demand, and whatever liabilities or whichever shade of liabilities we have to raise to do that, we will do that.
Okay, so that was Mr. Tiwari of SBI talking about the way forward for the bank. An important one is, nonetheless, we were hoping that perhaps Mr. Sethi will also be speaking at the GFF and to ET now shortly. But that was Mr. Tiwari, the MD at SBI, talking to us about the way forward and how the entire financial sector is poised for growth right now. But shifting focus to what's happening in the market, and in the last few minutes, there has been a bit of a perk up on Vedant Fashions. We have stopped talking about the stock. Has been a rank underperformer since its listing itself. So just watching out for that. GSPL is the other one. Off late, we have seen good traction, and today as well, that stock has managed to perk up. On the losing side, V-Guard has taken a bit of a knock. Let's pull up the intraday chart of V-Guard if that's the right rate for me on the screen, because that's showing quite a bit of decline. No, it's down just about 2% only right now. But coming back to the markets and the key stocks and sectors which have been in focus, just wanted to get a better sense from you, Anshul, regarding some of these real estate stocks, because there's a bull versus bear case kind of scenario building up on those. Part of the street believes that the peak is over and we have seen the best with respect to the stock prices as well. But some believe that it's going to be a long drawn cycle, and there's still a case to continue holding some of the real estate names. Your take?
Hi, Anisha. So on real estate, there is definitely a lot of positive price action which has played out over the last 3 years. And that is obviously because of on-ground activity which has been favorable. But going forward, while the premium segment of the real estate market has done very well, the less than premium segment has really not done too well over this period. If consumption in the country, if investment in that space is to pick up, then it is this category which has to come in and play its part. So while you may see some stocks which are more premium or some companies which are more premium in their offerings, those companies kind of stagnating, But in our judgment, the sub-premium segment in real estate has significant legs. And with the sector having cleaned up over the last 10 years, that opportunity still remains. Volumes in that space should pick up. And that is a space which is not so linked to the equity markets. It's more linked to actual end consumer demand. And as that demand picks up, we do believe that volumes there should pick up going forward. So real estate, I don't think that it is a sector which you can see with one lens. It is a sector which has various segments. Some segments may stagnate, as you rightly said, but there will be segments in this space which will do very well. And so identifying the right opportunities here is really the game going forward.
Okay, identifying the opportunities, that's something that one needs to do. Kunal, but what about the opportunities in the auto pack? We're just at the cusp of the end of the month, and if you go by the Goldman Sachs data, it looks like August is going to be a bit of a soft month because we haven't seen a massive pickup in any of the sales, even though the launches have been something which has got the street excited. Anything on the stock price that gets you excited?
I think Ashok Leyland is the only stock which is looking attractive. Bajaj Auto has done reasonably well, crossing levels of 10,000 mark and then sustaining at closer to those 10,000 plus levels. I think out of the rest of the pack, many of the other names, they have had false starts for themselves, but nothing major in terms of the trend pickup for many of these stocks, whether it's the likes of Hero MotoCorp, which is now getting into a stagnation kind of a zone. Eicher Motors, I think, has been at 48, 49.50 odd mark for the last 1 or 2 weeks, and that stock is also showing signs of more of a range movement. And I think, the likes of Maruti, for example, that stock has had a very strong breakout above the 10,000 plus mark. But then at 11,500, 12,500 range, the stock has been a lot more sideways. So there is literally not major kind of a trend which is picking up in the entire auto pack, and I think that's where one would probably have to be a lot more specific. Ashok Leyland is still at 260 plus levels, which is the one where I would believe that there is still some strong momentum ahead. Would look out for targets in the range of 290 to 320 for Ashok Leyland over the 1 to 3 months. But most of the other pack would just be more of trading bets rather than any kind of a positional bets.
Right. Okay, that's the take coming in on autos right now. In the meantime, let's also address what's actually on the losing end. And sure enough, it's Asian Paints, there's Adani Enterprises, Maruti, Axis Bank, SBI is also a laggard, as is the case with ICICI Bank. That's also just mildly soft in trade right now. In fact, there's Adani Enterprises too, which is down about almost 1.5%. You're seeing Nestle, Ultratech Cement, L&T, which is also lower by about almost 0.5% as we speak right now. Anshul, what's the broad messaging though? Whether or not to even put fresh money to work at this juncture in the market, given the kind of valuations and the run-up we've already had or not?
Aisha, the markets are trading at 20 times price to earnings on FY26 numbers. This is Nifty estimates. Small cap index is also around the same level. And the mid cap index is in a different orbit altogether, over 30 times price to earnings. Now, in this sort of a market, unless you're a seasoned investor who can identify opportunities which are still cheap, it becomes very difficult to identify reasonably priced opportunities where the margin of safety is high. So if your portfolio is like 70-80% in equities, this is not the time to add more to equities because by and large, the markets are fully priced. But if your portfolio is say 20-30% equities and you've mostly missed the rally, then adding some to the markets and that too to quality names, large caps, more liquid names is a better strategy than not. Also because in that space, if you do see corrections, you'll have the heart to go in and invest further because markets have come off, names are well researched, good companies, you'll be able to add more to those names. But putting new monies in spaces which have done well recently and where you are chasing returns is a fool's paradise. In fact, it is that space where you will really burn yourself again and then be out of the market for the next 4 or 5 years and then come back again when the markets are at peaks. So, that is really not the space one should be looking at this time. But I can, despite my saying this, I know that most people will still look at that space. It is really Nifty 50 and the large caps where you have relative value at this time as regards, various segments of the markets. And it is there if you want to put new monies to use, it is there that you should be investing new monies clearly.
That is where you need to invest your money. Thanks so much, Anshul, for making time and speaking with us today. But time to take the BTSC trades from our chartist. Naresh, what's on the buy today, sell tomorrow radar?
So first is a buy on Cipla near to new all-time high, stop loss at 1595, target price of 1660. Second is a buy on Eicher Motors, the only one which is yet to break out in the auto pack, very close to a new all-time high, stop loss at 4920, target price of 5050.
Right. Kunal, what about your BTST ideas?
So I'll go with the buy on Bharti Airtel. That's a chart which is looking attractive, confirming a swing breakout fresh. So would suggest a target of 1600. Stop loss could be kept at 1535. And Balrampur Chini is something which I've been bullish on. The stock has done reasonably well, now inching closer to that 600 plus mark. So targets of 610. Stop loss could be kept at 570.
Right, okay, on that note, just 3 minutes left to go, thereabouts, for winding up trade. Let me hand it over to Snehi to find out how the closing trades have panned out.
Well, absolutely. Let's take a look at how the market action has panned out today. If you take a look at Nifty 50, we're rather flat. We've lost all the gains that we did see coming in, but nonetheless, we've hit a record high in today's trading session, but we're closing under those record high levels of 25,078. As of now, at 25,040 is where the Nifty is just holding on to the green. If you take a look at Sensex, also has lost all the gains of the day. 0.3% higher is where the Sensex was, and right now absolutely flat. But you do have the broader markets that are underperforming even the benchmarks, because Midcap has been languishing ever since the beginning of today's trade. That was in the red, almost 0.2% lower, but it's the small cap index that has reversed all of its gains, because at one point in the day, small cap was also 0.3% higher, but as of now completely flat with a slight negative bias. Now, if you take a look at all the sectoral gainers and losers today, it was clearly Nifty IT's day. IT stocks were abuzz today on the back of multiple news flows. You had order wins, collaborations, brokerage notes coming in, so all worked in the favor of Nifty IT today. And as of now, with more than 1.5% gain is where Nifty IT is all set to close today's trading session. You had Nifty Pharma also that followed closely behind Nifty IT, the second top sectoral gainer in today's trading session. 1% uptick coming in on Nifty Pharma as well. You had Granules, Divi's Life, Zydus Life, Alchem, Trent Pharma that held the Nifty Pharma index quite high today. On the flip side, Nifty Media was an index that was under pressure. FMCG also ending the day in the red. PSU Banks, Nifty Bank, Metal, Auto, Nifty Realty, all of these indices in fact are ending today's trading session in the red. But on that note, let's take a look at some important winners and losers in today's trading session. First up, on the back of brokerage notes that I wish to highlight, LTI Mindtree was up 7% after Kotak upgraded that stock and also hiked the target price. You had Bernstein stocks, Bernstein note coming in on all the retail stocks, and on the back of that, Trent was a stock that did pretty well today, and they've given an outperform rating with a target of 6,300. So you had Trent that closed with gains of almost 5% in today's trade. CLSA on IndusInd Bank also, they maintained their outperform rating. Citi has maintained a buy rating on L&T Finance after the management meet that was held. However, Axis Cap has downgraded Indigo, which is Interglobe Aviation, and that stock did not do well in today's trading session. But let's move away from brokerages and talk about some other buzzers in today's trade. NBCC, this stock was up 10% at one point because the board is going to be mulling a bonus issue on the 31st of August and continues to hold on to those gains. 10.5% higher is where NBCC is also as of now. Indus Towers all set to become a subsidiary of Bharti Airtel, so that stock was also holding up pretty well. Roughly a 2% gain coming in on that stock as well. You had Wipro that expanded 4%. They're going to expand their collaboration with Dell, so positive news flow coming in for Wipro, and this is what helped Nifty as well as Nifty IT also gain in today's trading session. You also have L&T Tech that was up 3% on the analyst day takeaways. Zydus Life has got the US FDA nod for its Parkinson's drug, and you also have Jefferies that has upgraded that stock to a buy rating. So Zydus Life also ending the day with gains of more than 2%. Shoppers Stop also did pretty well on the back of bringing Max Factors to India, and Jio Financial has upped its stakes in Jio Payments. So all of these stocks were abuzz in today's trading session, but that's how we're closing shop for today on the Nifty. 0.1% higher, 2545, slightly under that all-time high mark that we had hit initially. At one point we were above 25,100, but we've receded right now. 25,045 is where we're ending the Nifty today.
I am the